Good morning. This is David Max from Miami. It's a beautiful Monday morning and I'm hitting a little bit of traffic, but I don't complain because I live in a place where most people want to vacation, a place where we have freedom, we have financial independence, and we are allowed to grow families, have a relationship with God with no problem. In one of the states, which is Florida, that is very friendly and very enterprising because it allows business owners and investors to do a lot of business. Today, as I promised, it's Monday and I like to talk about a strategy, and today I want to focus on financial strategy. And one of the things that we need to understand is that there are two different ways that you can build a business when it comes to money. Either you invest capital or you get credit leverage, which is basically long-term financing and short-term financing and a combination of both. So basically, the importance of having other people give you money, especially banks that do it at a low interest, which is deductible from taxes, is very important. And it cannot be, basically undervalued. You have to really value high the situation with the banks, and you have to, protect your credit score, and you have to be very proactive with your financial reports, so they can be ready at any time to sit down with a bank and take a look at options. And I had a prospect coming into our office that is becoming our client right now, and he invested into like $5 million of assets with 50% financing from the bank. And I spent a couple of hours with him explaining how all these buildings and investments of real estate that he bought, they should be structured from the beginning in such a way that you need to keep every unit separate when it comes to keeping an accounting, if you're using QuickBooks or any software, because you have to report that at the end of the year. But not only that, but throughout the year, you can start tracking your performance and seeing exactly how you're doing. And if you approach a bank and you have this type of discipline, eventually he not only be able to obtain financing like 50%, but even better, instead of having 50% financing, someday he might have 80% financing in 3-5 years, whatever it takes for him to build that type of reputation, which is very key. Because if he does that, instead of just having $5 million, let's say, by doing all these things in a couple of decades or maybe less, depending on many things, he might triple, quadruple his investments, because that's typically what happens when you use leverage properly, especially in real estate investments, that give you the opportunity to obtain such a high leverage. So don't forget, we're not here for you not only to do tax and accounting, but we're here for you to help you, along with the banks and credit institutions and investors, to multiply your capital and your efforts. The second topic I want to talk about that is related to this one is the issue that, don't forget that when you have a business, or even when you are a regular person, you have three types of people. You have people that are proactive, you have people that are regular, and people that are reactive. And we all have needs that are security and growth needs. When you have a proactive person that is working on security issues, it's thinking about asset protection. So they can have a trust, they can work with us and attorneys to protect their assets. When they're thinking about growth, they think about tax and financial planning all the time. Regular clients, they take a look at compliance, making sure that they don't get any penalties and they follow every rule and regulation they can. And on the growth side, they want financial reports and their taxes done so they can apply for credit. At the bottom of the scale, you have people that are very reactive, and they have security issues because they need representation. So we represent them before the IRS when they have balances, when they have levies and the IRS is hitting their bank accounts, when they have liens against their property. They cannot sell their homes unless the IRS is satisfied with the payment, and they get affected on their credit report, which is bad for business because, like a construction company that is trying to get bonded, and the owner has this lien on the credit that they owe money to the IRS. That's not good. The same thing for getting any loan. And then finally, when they have growth issues and and they're reactive, I try to do an operational audit from the get-go, try to implement internal controls so they can actually determine the way to get out of there. Eventually, I turn them into regular clients. And my goal with each of my clients is to turn them into proactive clients that have asset protection, working with attorneys, and also that have financial and tax planning. God bless you. Don't forget, try to be very proactive, okay? Protect your assets with asset protection, and also do tax and financial planning ahead of time. Don't do it after December 31st. Do it on January 1st. And God will give you the opportunity to get out of the hole, to actually become a regular person that complies with the laws and actually has credit, and it can go to the bank and apply for credit. And eventually what's going to happen is not only we will help you multiply your assets, but you will be in a situation to protect these assets and to grow these assets doing tax and financial planning. God bless you. Have an amazing week. This has been David Max. Bye-bye.